Question 1. The impact of subrogation becomes particularly significant when a tenant is Ramirez accidentally causes a fire in a commercial property rented from a landlord insured under a standard building and personal property coverage form. The insurer pays for the fire damage under the property policy and now considers pursuing is Ramirez for reimbursement. However, the lease agreement includes a waiver of subrogation clause. What legal and insurance principle most likely prevent the insurer from recovering the damages from is Ramirez? A. The principle of proximate cause. B. The waiver of transfer of rights of recovery against others to us. C. The principle of insurable interest. D. The contributory negligence doctrine. Answer. Correct answer, B. Explanation. Under the ISO commercial property conditions, policyholders can waive subrogation rights by written agreement before a loss occurs. In this case, the lease contains a waiver of subrogation which falls under the policy's provision for transfer of rights of recovery against others to us. This clause allows the landlord insured to agree not to pursue as Ramirez, and thus the insurer is contractually barred from subrogation against her. Proximate cause A is liability concept, not relevant here. Insurable interest C defines who can benefit from policy, not who can be pursued for recovery. Contributory negligence D is used in liability claims, not subrogation contexts. This is aligned with NJ contract law enforcing valid waivers of subrogation in leases. Question 2. In light of recent developments, a commercial insured Isteleon adds an expensive custom refrigeration system to his food distribution warehouse. A few months later, a power surge causes the unit to fail, resulting in $60,000 of spoilage loss. Isteleon assumed the loss was covered under his commercial property policy. However, the insurer denies the claim. What coverage endorsement could have addressed Isteleon's exposure and prevented the denial? A. Equipment breakdown coverage endorsement. B. Spoilage coverage under CGL. C. Ordinance or law endorsement. D. Earthquake cause of loss form. Answer. Correct answer, A. Explanation. Spoilage from equipment breakdown. E. G. Mechanical failure. Power surge is not covered under standard commercial property forms unless endorsed. Equipment breakdown coverage, formerly boiler and machinery, is designed to cover the sudden and accidental breakdown of machinery, including refrigeration equipment. Without this, losses from surges and mechanical failure are excluded. Spoilage under CGL B is incorrect. DLA doesn't cover property damage to owned items. Ordinance or law C applies to building code upgrades. Earthquake D is irrelevant here. NJ insurers recommend customizing coverage through endorsements to meet business-specific risks. Question 3. When considering legal liability in the context of vicarious acts, a delivery driver employed by Simmons Logistics negligently injures a pedestrian while making deliveries. The pedestrian sues Simmons Logistics, claiming the company is responsible for the driver's actions. Under what principle is Simmons Logistics most likely held legally liable? A. Comparative fault doctrine. B. Assumption of risk. C. Vicarious liability. D. Strict liability. Answer. Correct answer, C. Explanation. Vicarious liability is a legal doctrine that holds employers responsible for the negligent acts of their employees when performed within the scope of employment. In New Jersey tort law and commercial liability insurance, this is a common basis for corporate liability claims. Comparative fault applies to plaintiff negligence. Assumption of risk B is a defense, not a basis for employer liability. Liability D usually applies in product or hazardous activity cases. CGL coverage was bodily injury and property damage would respond to this incident. Question 4. In a modern context of professional service risks, a New Jersey marketing firm provides social media consulting to a client. The client later sues the firm for financial loss, claiming that the marketing advice led to reputational harm. The firm has a standard CGL policy. How will the CGL policy likely respond? A. Deny the claim due to the professional services exclusion. B. Provide full coverage under coverage A. C. Cover the claim under medical payments. D. Pay only defense costs under supplementary payments. Answer. Correct answer, A. Explanation. Standard CGL policies exclude professional services under exclusion J. This includes consulting services such as those provided by marketing or advertising professionals. A professional liability policy (EO) is needed to cover such claims. Coverage where B applies to bodily injury or property damage, not financial losses. Medical payments, C cover only injuries, not reputational harm. Supplement. Payments D only apply if the insurer has a duty to defend, which is excluded here. New Jersey producers must recommend EO to clients offering professional advice. Question 5. Examining the consequences of coinsurance, Mr. Patel insures his $1 million warehouse for $600,000 with an 80% coinsurance clause. After a covered loss causes $400,000 in damage, the insurer applies a penalty due to underinsurance. How much will the insurer pay before deductible? A. $400,000. B. $375,000. C. $300,000. D. $600,000. Answer. Correct answer. C. Explanation. Coinsurance penalty equals amount carried, amount required. X loss equals $600,000, $800,000. X $400,000 equals 0.75. X $400,000 equals $300,000. Mr. Patel failed to meet the required 80% coverage. NJ insurance law and ISO policy forms enforce this penalty unless waived. $400,000 A would be full loss payment. $375,000 B is incorrect math. $600,000 D exceeds the loss amount. Coinsurance encourages adequate insurance to avoid penalties. Question 6. Given the circumstances, Is operates a high-value antique shop and wants protection for goods transported to trade shows. Her agent recommends a commercial inland marine policy. What feature of this policy makes it suitable for her needs? A. It excludes property in transit. B. It provides named peril coverage. C. It offers coverage beyond fixed locations. D. It is limited to scheduled premises. Answer. Correct answer. C. Explanation. Commercial inland marine policies are designed for mobile property, providing broader, often all-risk coverage for items in transit or at unscheduled locations. It suits businesses like antique dealers who need coverage during exhibitions. A is false. In transit is the purpose of the policy. B is incorrect. Inland marine is usually open peril. D applies to standard property policies, not inland marine. New Jersey recognizes the nationwide marine definition under which such coverage is regulated. Question 7. Throughout the course of underwriting, an insurer evaluates an application from Mr. Alston, a new business owner requesting liability and property coverage. The underwriter declines the risk due to the business's history of frequent small claims under another name. What underwriting principle supports this decision? A. Adhesion. B. Concealment. C. Adverse selection. D. Estoppel. Answer. Correct answer. C. Explanation. Adverse selection occurs when higher-risk individuals or businesses are more likely to seek insurance. Underwriters use prior claim history, even under prior business names, to identify this risk. Adhesion A relates to contract interpretation. Concealment B is misrepresentation by the applicant, not the insurer's logic. Estoppel D prevents changing positions, not risk rejection. NJ underwriting guidelines emphasize managing adverse selection to maintain rate adequacy. Question 8. From multiple perspectives, consider a commercial insured is Cardoza, whose business suffers a 10-day interruption due to fire damage. She files a claim under the business income and extra expense form. However, the insurer limits payments to a 72-hour waiting period. What concept defines this limitation? A. Restoration period. B. Waiting period. C. Blanket limit. D. Extended business income. Answer. Correct answer. B. Explanation. The waiting period under standard ISO business income forms is typically 72 hours, meaning coverage only applies after this period elapses. The restoration period defines the maximum payment window, not the start delay. Blanket limit. C. Applies to combining locations, not time. Extended business income. D. Pays for income lost after reopening. NJ-specific endorsements may alter the waiting period, but the standard form maintains this deductible-like feature in time. Question 9. When analyzing a commercial auto policy, Mr. Donnelly has hired a non-owned auto liability coverage for his accounting firm. An employee causes a crash while driving her own car to meet a client. What does this coverage address? A. Damage to the employee's car. B. Employee injuries. C. Liability the business may face. D. Personal auto liability. Answer. Correct answer. C. Explanation. Hired and non-owned auto liability covers liability incurred by the employer when employees use personal or rented vehicles for work. It does not cover damage to the employee's vehicle or their injuries. A and B are excluded unless other policies, W are physical damage, respond. D applies to personal policies, not commercial. Under NJAC 11.3.16, business use of personal vehicles must be disclosed and properly insured. Question 10. To illustrate this point is Gallagher, an insurance producer in NJ, is accused of rebating after offering a client a $250 gift card for purchasing a commercial policy. Which NJ regulation governs this conduct? A. The Fair Access to Insurance Requirements Act. B. The Insurance Producer Licensing Act. C. The Unfair Trade Practices Act. D. The Civil Remedies Against Insurers Statute. Answer. Correct answer. C. Explanation. Under NJSA 1729 rebating, offering inducements not specified in the policy, is violation of the Unfair Trade Practices Act. Producers cannot offer gifts, money, or benefits exceeding nominal value to influence the purchase of insurance. The Insurance Producer Licensing Act B governs licensing, not marketing conduct. Fair Act A relates to property coverage availability. Civil Remedies D concerns lawsuits against insurers. Violations may result in license suspension by authority. Question 11. Considering the evidence Mr. Baker owns a commercial building insured under building and personal property coverage form, after a heavy snowstorm, the roof collapses due to accumulated snow weight. The insurer denies the claim, citing a specific exclusion. What exclusion most likely applies to this claim? A. Ordinance or law exclusion. B. Neglect exclusion. C. Wear and tear exclusion. D. Flood exclusion. Answer. Correct answer. B. Explanation. The neglect exclusion in commercial property policies excludes coverage for losses caused by the insured's failure to properly maintain the property or protect it from further damage. Roof collapse from snow buildup may be denied if the insurer proves the insured neglected routine maintenance. Ordinance or law A excludes losses due to enforcement of building codes, not maintenance. Wear and tear. C excludes gradual deterioration, but collapse from snow is sudden if maintained properly. Flood. D is unrelated. Under NJ law, courts uphold exclusions clearly stated in policies, especially for preventable losses due to neglect. Question 12. In the absence of a specified limit endorsement, Mr. Sanchez's commercial general liability (CGL) policy includes aggregate limits and per occurrence limits. How does the aggregate limit function in relation to multiple claims arising from separate incidents? A. It limits the total amount the insurer will pay for all claims during the policy period. B. It limits payment to single claim only. C. It applies only to claims under coverage. C. Medical payments. D. It is unlimited for occurrence-based claims. Answer. Correct answer. A. Explanation. The aggregate limit is the maximum amount the insurer will pay for all covered claims during the policy period, regardless of the number of claims or occurrences. Once the aggregate limit is exhausted, no further payments are made. B is false. Limits apply across multiple claims. C is incorrect. The aggregate limits apply to coverage and B primarily. D is incorrect. Occurrence policies still have aggregate limits. NJ regulations mandate clear disclosure of limits to insureds for transparency. Question 13. Under the assumption that an employer in New Jersey fails to secure workers' compensation coverage for employees and one is injured on the job, what is the likely legal consequence? The employer may face criminal penalties and civil liability. B. The injured employee cannot sue the employer. C. The employer's commercial liability policy will cover the injury. D. The injured worker is not eligible for medical benefits. Answer. Correct answer. A. Explanation. New Jersey law requires employers to carry workers' compensation insurance or self-insure. Failure results in criminal penalties, fines, and exposure to civil liability for damages. BW benefits. The injured employee may sue for negligence due to lack of BUE coverage. B is false. Ilacadolusi does not bar lawsuits, it invites them. C. Commercial general liability exclude BUE injuries. The employee is still eligible for benefits, but from the court or employer directly. NDADOBA enforces strict compliance with significant consequences for non-compliance. Question 14. Taking into account the definition of covered autos in business auto coverage form, which of the following vehicles would typically be excluded from coverage? A. Company-owned sedan used by sales staff. B. Customer's vehicle temporarily in the insured's care for service. C. Vehicle owned by an employee used for personal errands. D. Newly acquired replacement truck notified to the insurer. Answer. Correct answer. C. Explanation. Covered autos generally include vehicles owned, leased, hired, or borrowed by the insured for business use. Personal vehicles owned by employees for non-business purposes are excluded. A is covered as owned autos. B may be covered under garage keepers or non-owned coverage. D is covered once reported timely. NJ commercial auto regulations require clear policy definitions to avoid disputes over coverage. Question 15. Within the framework of claims handling, Mr. Franken's insurer delays investigation of claim without notifying him. Under New Jersey Unfair Claims Practices Regulations, what is the insurer's obligation? A. No obligation to notify if investigation is delayed. B. Prompt notification and justification for delay are required. C. Insurer must immediately pay the claim regardless of investigation. D. Insurer can deny the claim without notice if investigation is delayed. Answer. Correct answer. B. Explanation. NJ Administrative Code N. J8C 11-136 requires insurers to conduct prompt, thorough investigations and notify the claimant of any delays or additional information needed. Failure to do so constitutes an unfair claims practice. A is incorrect. Notification is mandated. C is impractical and not required. D. Denial without notice violates regulations. These rules protect insureds from undue delays and ensure fair treatment. Question 16. From the perspective of underwriting, which factor most significantly affects the insurability of a new business applying for a commercial package policy? A. The business's prior insurance claims history. B. The presence of captive insurance company. C. The number of employees in the office. D. The location of the insurer's headquarters. Answer. Correct answer. A. Explanation. An underwriting principle prioritizes the applicant's prior claims history to assess risk and pricing. History of frequent or large claims suggests higher risk and can lead to denial or higher premiums. B is irrelevant to underwriting the applicant. C matters but is secondary to claims history. D. Insurer location doesn't affect applicant risk. NJ underwriting guidelines promote risk-based pricing grounded in accurate loss histories. Question 17. During the process of policy cancellation, Mr. Johnson receives a cancellation notice from his insurer stating termination effective immediately without explanation. What is the proper legal procedure under New Jersey insurance law? A. Immediate cancellation without notice is permitted. B. 10 days notice for non-payment, 30 days for other reasons is required. C. No notice required if the policy is less than 60 days old. D. Cancellation can only occur at policy renewal. Answer. Correct answer. B. Explanation. Under NJS 817-29 insurers must provide at least 10 days written notice for non-payment and 30 days notice for all other cancellations or non-renewals, stating reasons. Immediate cancellation without notice violates NJ regulations and is unfair practice. A is unlawful except in rare fraud cases. C applies to some states, but NJ requires notice regardless. D is incorrect. Midterm cancellations are allowed with notice. This protects policyholders from unexpected coverage loss. Question 18. How might one explain the primary difference between an excess liability policy and a commercial umbrella policy? A. Excess liability provides broader coverage than umbrella policies. B. Umbrella policies provide broader coverage and drop-down features. C. Excess liability policies cover only professional liability. D. Umbrella policies have lower limits than excess policies. Answer. Correct answer. B. Explanation. Umbrella policies provide broader coverage, often filling gaps and covering some claims not covered by underlying policies. Drop-down coverage. Excess liability policies provide coverage only after underlying limits are exhausted, with no broader coverage. A is incorrect. Excess is narrower. C is wrong. Excess covers many liability types, not only professional. D. Limits depend on policy, but umbrellas are typically higher or equal. Understanding this distinction is vital in NJ commercial risk management and coverage placement. Question 19. Based on the information an employee theft occurs at Mr. Davis's warehouse, his crime policy covers employee theft but excludes theft by temporary employees. The perpetrator was temp worker. How does this exclusion affect Mr. Davis's claim? A. The claim will be denied due to the temporary employee exclusion. B. The claim will be fully paid under employee theft coverage. C. The claim is covered under forgery or alteration coverage. D. The insurer must cover because the employee was on site. Answer. Correct answer. A. Explanation. Most employee theft crime policies exclude temporary or seasonal employees unless specifically endorsed. This exclusion limits insurer liability to protect against higher risks associated with temps. B. Contradict policy language. C. Forgery or alteration covers different crime types. D. Presence does not imply coverage. NDADOBI rules require clear disclosure of such exclusions to insureds. Question 20. Within the framework of unfair trade practices, is Taylor a licensed producer, gives a client a 5% commission refund after the policy is bound? What is the regulatory status of this action under New Jersey law? A. It is permitted as long as it is disclosed. B. It constitutes rebating and is prohibited. C. It is allowed for commercial lines, but not personal lines. D. It is only prohibited if the refund exceeds 10%. Answer. Correct answer. B. Explanation. Under NJSA 1729 rebating, offering anything of value not stated in the policy to induce purchase, is an unfair trade practice and prohibited regardless of disclosure or amount. A is incorrect. A disclosure does not legalize rebating. C. No distinction by line. Rebating is prohibited in all lines. D. No threshold. Any rebating is prohibited. Violations can lead to sanctions, fines, or license revocation enforced by NJDOBI. Question 21. Within the framework of risk management, Mr. Torres is evaluating how to handle a newly identified risk of cyber attacks on his commercial business. He is considering risk retention, risk transfer, and risk avoidance. Which of the following best describes risk transfer in this context? A. Purchasing cyber liability insurance to cover potential losses. B. Deciding not to use internet-connected devices in business operations. C. Accepting the financial loss internally without insurance. D. Implementing firewalls and cybersecurity protocols. Answer. Correct answer. A. Explanation. Risk transfer involves shifting the financial burden of risk to another party, typically through insurance. Purchasing cyber liability insurance transfers financial exposure to the insurer. B. Is risk avoidance, eliminating the exposure altogether. C. Is risk retention, accepting losses internally. D. Is risk control or mitigation, reducing likelihood or severity of loss. NJ insurance principles emphasize understanding these methods to manage exposures effectively. Question 22. As demonstrated by a recent claim, is Henderson's business owner's policy, BOP, includes liability and property coverage. However, the insurer denied coverage for damage to her computer software due to power surge. What is the most likely reason for denial under the standard BOP? A. The software is excluded as data and not covered property. B. Power surges are excluded under all commercial policies in NJ. C. BOP covers only bodily injury liability, not property damage. D. The insured failed to pay the deductible. Answer. Correct answer. A. Explanation. Standard BOP forms exclude data and electronic data processing software from coverage unless an endorsement is purchased. Power surges are also commonly excluded unless equipment breakdown coverage is added. B. Is too broad and incorrect. Some policies include surge coverage via endorsement. C. BOP includes property and liability coverage, but software data is excluded. D. Deductible. Do not cause outright denial but affect claim payment. Understanding policy exclusions is critical for NJ insured's purchasing commercial coverage. Question 23. Based on the information a commercial insured in New Jersey has, a commercial crime policy with employee theft coverage, an employee steals $75,000 over several months, but the policy limit for theft is $50,000 per occurrence. How will the insurer likely handle this claim? A. Pay the full $75,000 because theft losses aggregate annually. B. Pay only $50,000, the policy limit per occurrence. C. Deny the claim because theft must be a single event. D. Pay $25,000 only after the insured pays $50,000 deductible. Answer. Correct answer. B. Explanation. Most commercial crime policies have occurrence limits, capping insurer liability for each theft event. Unless multiple occurrences are proven, the insurer pays up to $50,000 for the entire loss. A is incorrect. Limits apply per occurrence, not cumulative. C. The policy does not require theft to be one incident, but limits apply. D. Deductibles in crime policies usually apply per occurrence, but $50,000 deductible is uncommon. NJ insurers carefully apply policy limits to control exposure. Question 24. Given the circumstances, a New Jersey commercial insured purchases a commercial general liability policy on a claims-made basis. 2 years after policy expiration, a lawsuit arises from an incident during coverage, but the insured no longer has tail coverage. What is the insurer's likely response? A. Defend and indemnify the insured because the claim occurred during policy period. B. Deny coverage because the claim was reported after policy expiration. C. Provide partial coverage based on policy limits. D. Pay defense costs only. Answer. Correct answer. B. Explanation. Claims-made policies cover claims reported during the policy period or extended reporting period tail. If a claim is reported after expiration without tail coverage, insurer denies coverage. A is true for occurrence policies, but not claims made. C. Partial coverage does not apply if no tail purchased. D. Defense costs are paid only if coverage triggered. DCGL forms align with ISO standards enforcing timely claim reporting for claims-made policies. Question 25. From the perspective of New Jersey insurance law, a licensed producer fails to maintain required continuing education C. credits. After a complaint is filed, what is the likely consequence? A. Immediate revocation of license without notice. B. License suspension until C. requirements are met. C. Monetary fine, but license remains active. D. No consequence if C is completed within 5 years. Answer. Correct answer. B. Explanation. The NJ Department of Banking and Insurance requires producers to complete C credits every 2 years. Failure results in license suspension until compliance. Revocation is reserved for serious violations. A is not the usual first step. A due process requires notice. C. Fines may apply, but suspension is primary. D. C. Deadlines are strict. No 5-year grace period. Producers must track C compliance to maintain licensure. Question 26. To what extent does the doctrine of utmost good faith impact the insurers and insured's obligations in commercial insurance contract? A. Both parties must disclose all material facts honestly and completely. B. Only the insurer must disclose material facts. C. The insured can withhold any information they consider irrelevant. D. Utmost good faith applies only in personal lines insurance. Answer. Correct answer. A. Explanation. Utmost good faith (uberibi fide) is a foundational principle in insurance contracts requiring both parties to disclose all material facts. Failure to do so may void the contract. B is incorrect. Insured's disclosure is equally critical. C. Material facts are defined legally and cannot be withheld. D. Principle applies equally to commercial and personal lines. NJ courts uphold this principle to ensure fairness in contract formation. Question 27. When faced with a commercial insured who requests coverage for a property that is under construction, which policy form provides coverage tailored specifically to this exposure? A. Builder's risk policy. B. Equipment breakdown policy. C. Business income policy. D. Commercial general liability policy. Answer. Correct answer. A. Explanation. A builder's risk policy is designed to cover buildings under construction, including materials, fixtures, and equipment on site. It addresses risks like theft, fire, and vandalism during the build phase. B. Covers equipment breakdown only. C. Covers income losses, not physical construction risk. D. Covers liability, not property under construction. NJ insurers require builders' risk for construction projects to ensure proper risk transfer. Question 20. In terms of policy provisions, what is the significance of the liberalization clause in New Jersey commercial property policies? A. It automatically provides broader coverage if the insurer adopts favorable policy changes during the term. B. It restricts coverage expansions unless the insured requests them. C. It eliminates all exclusions during the policy term. D. It allows cancellation without notice. Answer. Correct answer. A. Explanation. The liberalization clause applies when the insurer adopts more favorable coverage forms or endorsements during the policy period or shortly thereafter. The insured automatically benefits without additional premium. B. Is opposite of liberalization intent. C. No policy removes all exclusions. D. Is unrelated to liberalization. NJ mandates this clause to protect insureds from losing improved coverage benefits. Question 29. From a practical standpoint, Mr. O'Connell operates motor carrier business. He wants coverage that protects against liability arising from transportation of goods, including damage to cargo. Which type of policy should he obtain? A. Motor carrier coverage form. B. Business auto liability only. C. Commercial general liability. D. Equipment breakdown coverage. Answer. Correct answer. A. Explanation. The motor carrier coverage form is tailored for trucking operations, providing liability coverage and cargo insurance for goods transported. It addresses exposures unique to motor carriers. B. Business auto covers owned vehicles, but not cargo. C. CGL excludes coverage for auto-related cargo losses. D. Is for equipment breakdown irrelevant here. NJ motor carrier regulations require appropriate filings and proof of coverage under motor carrier policies. Question 30. Throughout the course of a claim investigation, an insured refuses to cooperate with the insurer, hindering the examination of records and inspection of damaged property. What is the insurer's contractual right under the commercial property conditions? A. Deny the claim for breach of the cooperation clause. B. Increase the deductible. C. Extend the claim investigation period. D. Waive the claim payment. Answer. Correct answer. A. Explanation. The cooperation clause is a condition precedent in insurance contracts requiring insured cooperation. Failure allows the insurer to deny or rescind the claim. B. Deductibles are fixed in the contract. C. Investigation extensions are subject to cooperation. D. Waiver means giving up rights. Not applicable here. NJ courts support insurers' right to deny claims when insureds breach cooperation obligations.